You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-Mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-Mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Friday, 6th day of December, 2024. Thanks so much for joining us.
If you are talking, I cannot hear you.
Just go ahead and do your thing.
All right. Sorry about that. I don't know what's going on because I heard the whole intro. I just can't hear you. I heard the whole intro, but I can hear everything. You know what? Wait. There's a setting on my side, I think, for that. But okay, so mine should be back again.
All right.
This one.
I don't know if you can hear me now or not.
Now I gotcha. I found it. It was a setting on GoToWebinar.
Okay. All right, buddy.
Okay.
It's all yours. Take it away.
You can see my screens?
Yeah,
Okay,
it looks good.
All right, I got you now. This is good. Forgot about that setting. It normally does it by itself. Here we go. Good afternoon, everyone. Today is Friday, the 6th day of December 24. Wow, that doesn't sound like 6th day of December 2024. Now, if you have not taken a free trial with us and you want to, go here to mytradingiq.com. Click on the purple button right here. There is no credit card required for the trial. Click on the purple button. You click the purple button. You are going to be sent to this registration page, which is for next week. All right, it's for next week. Yeah, make sure you sign up for this. All right, there's lots of changes going on. All of it's, well, not all of it's good, but most of it's good. You know, getting rid of DT Pro is not a good thing, but it's going to be good. Over time, you'll see that the new stuff that we're getting has a lot of bells and whistles that DT Pro didn't have. So you just got to get used to it. But anyway, go here. Once you click that purple button, it's going to bring you here to this page. All we ask for is your name, your email, your phone number. Down here at the bottom, give us your machine ID if you have NinjaTrader. If you're going to use NinjaTrader charts, give us your machine ID. If you're not using NinjaTrader charts, then we don't need it, right? We encourage you to use TradingView charts because, as I'm going to show you right now, we have indicators that are only on TradingView. We don't have them on any other platform, not DT Pro, not NinjaTrader, not any platform, just on TradingView. Gives you TradingView login ID right here. Okay, gives you TradingView login ID right there. Now, in the spreadsheet, we didn't trade a whole lot this morning because I was showing a whole bunch of stuff. But we did get the goal for the day. If you're going to read the spreadsheet, all the CFTC risk disclosures down at the bottom. We did get our goal for the day after the very first trade, 4 minutes in, our very first trade. We were up $1,200, right? And we took a total of 11 trades this morning. The morning session, we were plus 20 on the NQ, plus 20 on the Russell, and plus 2 on the E. So that put us at plus 225 overall in the morning session. Now, we were up way more than that. We did a lot more trading than that, but I was doing trading on the Sierra charts, and I was using the stuff that we talked about in the partners meeting last week for like the second 3 quarters of the morning session. The second 3 quarters, for the final 3 quarters of the morning session, the second 3 quarters, that would mean I had 1.5 morning sessions. But the final 3 quarters of the morning session. Anyway, we are so far on the month, we're up $820 a contract over 4 business days, averaging $205 per contract per business day. On the year now, we're at $112,887 per contract for 229 business days, averaging $492 per business day. If you were to quit trading with the goal for the day and add 1 contract per month, and this is critical, quitting trading when you get the goal for the day. It's a slow road. It gets you there. So far this year, you would have only had to work 68.66 hours, and you would have averaged $3,058 per hour. All right, I'm going to show you some stuff in here today. These trades over and over and over and over and over. You don't need to do that. You can pick one market and just trade it until you get your goal for the day and then be done, right? But this is, if you quit trading when you get the goal for the day, it really does turn into real money, $3,058 an hour. That is really good money. If you add that up, multiply that up, that's 40 times $3,000 per hour. Well, 4 times 3 would be 12, right? That'd be $120,000 a week, wouldn't it? $120,000 a week. That wouldn't be too hard to take, would it? Well, anyway, you can do the math. Let's get into the actual trades that we did. All right. Now, the ones that we did, see extra stuff in here. Let me get rid of the extra stuff. Get rid of the extra stuff right now. And stuff on here. But the trades that we took this morning, before we started in with the new stuff, those were the trades that we took. This is the gold. I guess we took 1 break-even trade on gold right here. This was the 1 trade we took this morning. It was a break-even trade on gold. Okay, and that was it. We did 1 trade on the Russell. Did we trade the Russell at all? Yeah, we did. The Russell's where we got our goal for the day this morning. On the very first trade, it was right here. We got our goal for the day on this trade. We picked up 20 ticks. Got a break even on that one and a break even on that one. Just using the normal trades that we make, trades that we okay, that was the Russell today. ES, we had a couple of trades using the normal stuff we do. This first one, 12, and then this one we stopped. 12 takes profit on that one and minus 10 on that one. Got us to +2 overall on the ES. Okay, and on the NQ this morning, we had a few trades. Here we are. The first trade here, we picked up 24. Then we had a break even. Then we had 12 more to get us to 36. And then we had 20 to get us to 56. And then we stopped up down to 20. All right. And that was all that we did. So I guess it really was the last hour and a half this morning. It really was the last 3 quarters is when I got into the other stuff this morning. All right. So that this morning in the room, doing the stuff that we normally do. I want to show you all something else. I just want to take a look and see what Bitcoin's doing today. Okay, so Bitcoin had a big day yesterday. Big day yesterday. Green so far today. And then the XRP too. XRP has got a green day. That's all I was curious about as far as the cryptos go. So I am bringing this over here right now, and I want to show you those of you guys who were in the partners meeting last night. The break even. Okay, Matt, I'll look at that in a little bit. Those of you guys that were in the partners meeting last night, you got to see me do what I did this morning. You got to hear me talk about doing what I did this morning. Last night. Basically, you don't need to look at price and you don't need to have any kind of indicator on. Okay. All you need to look at is this and this. Okay, you see it's just the TV trades range trigger and the ultimate slingshot. And what you're looking for is, well, we don't have any of it right now. But you're looking for separation between the 2 of them. That's all you're looking for is separation between the 2 of them. If you get the separation, you can enter. Once the bar closes, you enter at the open of the next bar. You can wait until the bar closes, and when the bar is closed, put your limit order at the open of the next bar. Okay. So you can wait till the bar closes. This flies in the face of everything that we normally do. You wait until the bar closes, and then you put your limit order at the open of the next bar. So without looking at price right here, I can there were trades. Using the stuff down here in the bottom, just using the oscillators. You can see where there were trades. If we take the gold, for instance, right here, without looking at price, I can tell you that there was a trade right here. Let me drag this over. There was a trade right there. That there was a trade right here. And that there was a trade right here. All right, those three spots right there. There are trades. This was a sell. This was a buy. This was a sell. You would be selling the open of the bar after this line, buying the open of the bar after this line, selling the open bar after this line. And right here, buying the open of the bar after that line, buying of the bar after that line. All right. You can wait until the bar closes. You don't have to put the order on ahead of time. You can wait till the bar closes. You don't have to do the math. You can just wait. See the stuff that's going on down here in the oscillator? You just wait. Okay, you see all these things that I've just drawn up? You just wait. If this were to get into the oversold right now, I would wait until the bar closes. If this did, the next bar, the only way for that to get into the oversold is intra-bar. So if this bar closed down, the current bar that's going right now, if it closed down, or even if it closed up and somehow this ended up in the oversold, and there was a separation that you see right here between these two, that's enough separation that it's going to cause a trade. It's going to trigger a trade. So you'd want to buy open of the next bar if that were to happen. Okay, you see the YM just had this. So you'd be looking over there to see if you're going to have a trade there on the YM. All right. So without even looking at price, this is what you would. Okay. Now if we go up here and we look at price, this I said, let me put the actual arrows up here closer to price. This would be a sell. This would be a buy. This would be a sell. This would be a buy. This would be a buy. This would be a sell. This would be a right. Looking at price without looking at the ribbon. I'm going to take the ribbon off. I just took the ribbon off. I don't even have any indicators on price at all. All right. So right by the open of the next bar. This is gold. So you're looking for 10 ticks in profit to get the gold for the day. The open of the next bar. The open was right here at 58.1. 60.6. More than gold for the day. This one right here would have stopped you out. Right, that one would have stopped you out. You would have sold the open of this bar at 60.7, and the lowest they got was 60.1. Actually, you might have gotten a break even on that. You might have bumped your stop to break even because you're gonna do your to break even after 5 profit on a 9 range. This one right here, you would have bought the open of this bar, gold for the day. This one right here, bought the open of that bar, gold for the day. This one right here, sold open of that bar. Pretty close anyway. If you sold 59, it dropped down to 8.3, so 7 ticks. You would have gotten pretty much a goal for the day. We've at least gotten a break even, maybe a little bit of profit. This one would have been the goal for the day, and this one would have been the goal for the day. Without even looking at price, without having any indicators up there on price. Just using what's here. Do you see how simple? We went over this in the partner meeting last night, and I did it live in the room this morning for people. And I did it live using the Sierra DOM. Okay, because a week from today, this is being discontinued. As much as I love using this, it's going to be gone. And we're going to be going to this. All right. And I know when you're looking from side to side, This is the NQ. This is gold. So if you're looking at gold side to side, this is what it looks like. All right, I don't know why the gold doesn't have the full ladder showing in here. Usually it does, but for some reason right now it's not. But this is what it looks. And when you're putting buy trades, if you're buying this, buy stop limit is just one mouse click there. Buy stop limit is just one mouse click there. Brackets all set up. Now this has the break even button. You hit the break even and then you got to hit the dialog box. With this, it's a keystroke. To go to break even on this, you put that on, and to go to break even, I do Control Z. Control Z makes me stop, go to break even on this. Okay. Now, I don't know why I couldn't do this morning. The NQ is giving me trouble this morning on this. So we had that going on this morning too, right? There was a lot of change in the room this morning. Now, everything that we were doing was working just fine, all right? Everything that we're doing was working just fine. This is just so much easier and simpler, and you don't need to look at price. So the decision process just got made even easier. You don't need to try to get ahead of time. You don't need stuff anymore. Right? If you don't, you can, but you don't have to. All you have to look for is separation between these bars and between these lines, and one of them's going to get into the oversold while the other one doesn't. Okay, and I know this is a new concept to you guys, but I'll show you this. I showed it this morning. I'll show you this. Hang on. What was that thing that I showed? Hang on, here it is. This is 535 trades. Went from $1,000 to 121,685. That's from February to November. And that was the NQ. This is the ES. 626 trades, $1,000 to 66,188 in the same time frame, February to November. Okay. It's basically the same concept as this, except that's just going back and automatically testing it for us, back test. So, any questions? Anybody? We don't have any trades right here, right now. For anything, we don't have any trades. Even if this down here, the context on it, you still wouldn't have it. Okay, you'd be getting close to a trade. When this gets into the oversold right here, the difference between what we normally and what I'm showing you right now, this new stuff, is normally you have to have all four lines in ribbon. You'd have to have a higher swing, all four lines. You'd have to come out of the oversold. You'd have to come out of the oversold. What I'm showing you right now, when it gets into the oversold, is going to be the. So you have that whole extra bar length right now. This open right here on the NQ. If I can find my. I've been doing this CNQ. Here it is right here. So I'm going to buy the open right here. Try to buy the open. There it is. Okay. So I bought the open. I actually did it twice by accident. I bought the open right here. Normally we would wait for this to pop up out of the oversold and go for the long trade once it comes up out of the oversold. But what I'm showing you right now, when this gets into the oversold and you have the separation between this and this, you have this divert, you can just buy the open of the next bar. Your stop doesn't have to be 36 ticks, but one bar is what your stop should be. And you don't have to have your order waiting there, right? You shouldn't have your order waiting there. Wait until you see what the open is, and then you put your order on. 21 is where I should have entered that. I'm actually in at 21 and a half. But 21 is where I should have entered. I should have had a limit order waiting at 21 and just entered at 21. All right. What do I expect out of this? Well, I expect one full bar length, right? One full bar length, and that's enough to get the goal for the day. Okay. That's what I'm looking for out of this. My stop is, well, my stops, I have two stops on because I accidentally hit it twice, but the stop is roughly 36 ticks away, but it doesn't need to be 36. It can be like 32. I'll just leave it where it is for right now. Okay. But that's it. It's a whole new concept. Kind of flies in the face of waiting until the bar closes and continues in the direction of the trade. You don't even need to see what's going on this. You don't need the context. Why do I keep doing it? You don't need to see the context there. me put my Dom back up and pin this. All right. You just have to have the separation. You're trading the oscillators down here. Okay. And that's it. Same rule for moving the stop to break even. Once it gets up to 25.5, we'll bump the stop to break even. And there it is, stop to break even. And now I'm just going to lock in 1 point on this. And what do I expect? I don't expect the whole 48 ticks. I expect it's going to get up to the prior swing high. That's what it should do. At a minimum, it should do that. But, I'm just going in here to get my goal for the day. And right now, 2150 up to 2550, that's 16. Right there is the goal for the day. You see that? And I'm actually still in there with 12. That only got half of my contracts off there. The goal for the day with the second bunch. Yeah, I guess I'll let those ride a little better. There you go. Do I have a target up there? I don't. Okay, now I'm out of all 24 of them. Right, did you see how easy that was? But normally we would have waited for this up close, so we would have just gotten long right here. But what I was able to do was get long right down here instead. All right, instead of waiting for the up close, normally we'd get long right here and we'd bump in our stop to break even right now. We'd be looking at it getting up to the prior swing high. And right here we'd be trailing our stop. Okay, that's what we normally be doing. So what we normally do works just fine. But I'm showing you something that is going to give you an equal, if not greater, number of trades that just has even less decision making. Okay, I'm trying to make it as easy as possible on all of you. Right here, over here on the Russell right now, this is a sell. All right, I don't know what price looks like, but you would have sold. It's too late right now, but you would have sold the open of this bar. All right here at 9.6. It's too late now because it's already run down from 9.6 down to 8.5. But this divergence right here, the separation, while this was up in the overbought and this was not. This right here on the gold right now, this is a buy right here on the gold. Right, are we too late for that one too? No, we can still buy the gold, I think. I'll try. We are kind of late on it. The entry point should have been here at 9.0, and it's run up to 9.5 already. So you would have already had to stop at break even on that. So it is kind of late to get into it now. But this is what you would have bought right here. The separation, when this got down into the oversold and this was not, you would have bought. When this got into the overbought and this was not, you would have sold. This one over here that I just did, I bought when this was in the oversold and this was not. Right? You see, every one of those trades has worked so far. This one you would have sold right here. You could have taken profit on it already. I moved to stop to break even. I missed it. This one over here, the entry point should have been right here, and it went from the entry point 5.9 up to 9.5. So I went from 9.0 up to 9.5. So that has already gone enough to where I would have moved the stop to break even. I did jump on it. I'm in it right now. Okay, I'm trying to bring my Dom over and show you. Here it is right here. All right, so I'm in it at 9.1. I don't have the greatest entry, and I probably shouldn't have done it at all, but I did. So here I am, and now I'm just waiting for it to go enough for me to move the stop to break even. So this is the Sierra Dom right now, and it doesn't have a break even button on it right here. It does have a break even button on another piece of the platform, but it's not on this. Now, Ted, I don't know if Ted is in here. Ted V, are you in here? Ted V is not in here. Okay. Well, what I have right here to move the stop to break even is the keystroke. It's Control Z. That right there is what it should move it to break even. If I look at that, yeah. If I have it set up right, it'll move. There it is. It just moved it to break even. Control Z is a keystroke. It just took me out of break even right there. But it's a keystroke to move the stop to break even. Now, there's another part of this platform that is part of the order ticket that shows up over here. If you have trade, you can attach trade window to the chart window. I think that's what it is. I don't want to have that there. It takes up too much real estate on the other screen. So I have it separate. It's separated on the other screen. Okay, this is what it looks like on the other screen, like this. And I have these all, I have a chart book is what they call these things. I have a chart book created. It's got the 9 range, 19 range, 31 range, 7 range, all these different things that'll have the stops in the right place when you put the order on. Okay. But it's well, what happened here? There we go. All right, so there was just a trade right here that I didn't do. Right here we had the separation. You could have just bought right there on the ES. I guess it's not too late. You can still buy there on the ES. It hasn't gone 4 ticks into profit from the entry point. You would have bought right here at 97 on ES. Okay, and here it is at 96.75. Could have done it again on the NQ as well. On the NQ, it's too late now on the NQ, but you could have done it again over here on the Russell too. All right, but on the Russell you would have been selling, not buying. You've been selling right here. Actually, been selling up here. Is where you've been selling on the Russell. Okay, so I don't recommend you try to do this with a whole bunch of markets. Just focus on one market and do it with one market or 2 markets if you want to. But there's just a ton of trade opportunities. You see on the ES right now, it's starting to bump up right here. Now, when it gets to 4 ticks in profit, I'm just going to hit Control Z on this, and there it is. I'm going to hit Control Z, and that should bump my stop up, break even. The white is where the price actually is, right here. Okay, so I'm waiting for that to get up here to 97.75. There it is. So I hit break even, Control Z moves my stop to break even. And now we're in this trade. What do we expect out of it? Well, it'd be good if it gets up to here. Okay, right there. That was a limit order that I had just thrown on right there. You see it put a whole bracket on for me, but that was a limit order. Now this, I can just trail in a couple of ticks right there. And there it is, I'm out with a couple of ticks profit. And that was the ES trade. That was the ES trade right there. Okay. So what you're seeing here, guys, this is a Russell trade. What you're seeing here with these are CR charts. This is what I'm going to be moving to. Functionally, they are just like the DT Pro charts. When you're putting orders on, they're just like the DT Pro charts. Okay, a right click does basically the same thing. Moving the stops around, basically the same way. Put things on, take them off, basically the same way. It looks a little different right now. You're going to have to get used to the look. But functionally, it does the same stuff. That's what I'm going to be using. The DT Pro charts, if you use DT Pro to trade, they're going to be gone a week from now. So you have to have something else. All right. You need to start using something else. Start using it in Sim so you have a good time period of getting it working in Sim. Right. There was another trade right here on this that I just missed. This this down close right here, the open of this bar right here was the trade on the NQ right there. Right, I couldn't find my DOM a second ago to put that on. But that's it. Again and again and again. All right. Now, nobody's asked any questions about this, so I am going to wrap it up for right now. If anybody does have any questions, I made a good recording of this morning's session. A pretty good recording of this morning's session. You're going to have to contact me in Telegram if you want to get a copy of it. All right. We talked about it quite a bit in the partners meeting last night, too. Eventually, Valerie is going to get that out onto the Telegram channel for the partners meetings. All right. The workshops. But right now, she doesn't have it out there yet. But that's it. All right, I'm going to wrap it up here for now today. So if you have not taken a free trial with us and you want to, go here to mytradingiq.com, click on this purple button. When you do, it's going to bring you to this registration page. There is no credit card required for the trial. All right, we encourage you to get TradingView because those indicators, those oscillators that I just showed you, are only available on TradingView. All right, and while I was just doing this, there was a trade here that was good. 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 In this period, while I just did this without looking at price at all, without having any indicators at all on price, just had 5 trades, I think, 4 or 5 trades right there. That were all enough to get your goal for the day. Okay. I hope this is good for y'all. I guess I can pass it back out to fabulous Phoenix, Arizona in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you already know, I should have the audio on. I should be able to hear you when you start talking.
Yeah, I'm ready.
Okay, I can hear you.
Great. Recap of the morning session.
Today it took 4 minutes and 1 trade to get to $1,200.
Great way to end the week.
Yes, it is.
All right, guys, we will now pick up with our regularly scheduled programming. Our daily devotional, a word of prayer, some news, a recap of the Logic 247 alerts, the concierge trade alerts, and we'll wrap up the week with our good word for the day. The topic of our devotion, we're in day 6 of 7 on this topic. Number our days. Today's scripture is Psalm 90:16. Let your work be shown to your servants, and your glorious power to their children. This is about relying on God's strength, not your own. True strength does not come from our abilities, but from God's power working in us. When we rely solely on ourselves, we quickly reach our limits. God invites us to lean on Him, trusting that His strength will carry us through every situation. So the question, are there areas of your life where you're relying on your own strength rather than God's power? If so, you should know how to fix it. Let's pray. Heavenly Father, we thank you for being our strength. When we feel weak, help us to depend on you instead of our own abilities. We ask, God, that you would show your power in our lives and let others see your work in us. It's in Jesus' name we believe and pray. And everybody said, amen. Amen and happy Friday. Let me give you the numbers from around the world. I'm going to start here in the U.S. with the cash markets, or the indices as they're called. The Dow is down 117 points. The Nasdaq's up 121. S&P 500 is up 9, and the Russell 2000 is up 9. But once again, mixed markets. At least today we got 3 of the 4 the same color. Now when it comes to trading the indices, we like to see the big 4, the Dow, the Nasdaq, the S&P, and the Russell, all the same color. It doesn't matter if they're all red or all green, because with futures you can trade in either direction at the drop of a hat, if that's what the chart in front of you tells you to do. And it's on the days when they're not all the same color, and I think that's been true almost every day this week, maybe 4 out of 5. But those days you got to be a little more careful, because you may not get the same follow through that you typically get, and they are all the same color. In the commodity basket, crude oil down 83 cents, trading 67.47 last. That's a drop of 1.25%. Gold up $11.50, trading $26.59.90 last. Silver up 9 cents, trading $31.63 last. In the Asian markets at the close, Nikkei fell 304 points. The Shanghai rose 35. The Hang Seng gained 305. Now for the Shanghai, those 35 points, that's over 1%. For the Hang Seng, 305 points, that's 1.5%. And in the European markets at the close, FTSE down 40, the DAX up 25, the CAC up 96. And for the CAC, that's a gain of well over 1.25%. So we had a mixed day in Asia. It was a mixed day for the UK. And as I've already mentioned, it is a mixed Radio Friday here at the moment in the US of A. So let's take a look at the news. A coalition of Syrian rebels captured the country's fourth largest city of Hama yesterday, forcing the Syrian army further south. The conquest follows last week's takeover of the commercial capital Aleppo, with the group reportedly continuing south toward Homs in the direction of the capital, Damascus. Spinning the globe a little more down to Colombia, well actually, this is happening in the U.S. Colombian drug lord Fabio Ochoa Vasquez was released from U.S. prison this week after serving 25 years of a 30-year prison sentence. Ochoa is expected to be deported to Colombia in the coming days. Ochoa was the Miami distributor for Colombia's infamous Medellin cartel, led by none other than Pablo Escobar. At its height in the 1980s, the Medellin cartel supplied 80% of the world's cocaine market. By 1987, Ochoa was included in Forbes' list of billionaires. Wow, from a billionaire to a 30-year prison sentence. I guess he got out 5 years early for good behavior. I don't know. After several years in prison in Colombia, Ochoa was extradited to the U.S. on drug trafficking charges in 2001. He was also implicated in the 1986 killing of drug enforcement agent informant Barry Seal, the subject of the 2017 film American Made, starring Tom Cruise. It's a good movie, you should watch it. Ochoa's life was represented in the Netflix TV show also called Narcos. Colombia is the world's biggest cocaine producer and exporter, responsible for about 90% of the cocaine seized in the U.S. as of 2019. Matt Gaetz. I guess we may never know what happened there. The House voted last night 206 to 198 against forcing the release of an ethics committee report on former Representative Matt Gaetz. The vote returns the decision back to the House Ethics Committee for further deliberation. Yesterday's vote, which fell mostly along party lines, follows a roughly 3.5-year House Ethics Committee investigation into Gaetz over allegations of sex trafficking, drug use, corruption, and sex with a minor. Gaetz has denied the allegations against him. The Justice Department previously declined to bring charges. Last month, Gaetz resigned from Congress amid a since-dropped bid to become Attorney General under President-elect Donald Trump. Separately, Trump announced nominations for other key posts yesterday, including Caleb Vitello as Acting Director of Immigrations and Customs Enforcement. Turning to the market news, a labor market rebound announced this morning is likely to keep the Federal Reserve on track to cut interest rates by another quarter percentage point later this month, absent any upside surprises to inflation. For the Fed, this doesn't change the narrative, according to Citigroup's senior chief economist. The new jobs numbers are right in the spot of what they were looking for, and they are comfortable with the continue easing policy. Data from the Bureau of Labor Statistics released this morning showed 227,000 new jobs were created in November, just above the 220,000 expected by economists. The unemployment rate, however, increased to 4.2% from the 4.1% seen in October. The U.S. Appeals Court has been busy this week. They announced today they're upholding a law requiring Chinese-based ByteDance to divest its popular short video app TikTok in the United States by early next year or face a complete ban. The decision is a win for the Justice Department and opponents of the Chinese-owned app, and a devastating blow to ByteDance. The ruling now increases the possibility of an unprecedented ban in just 6 weeks on a social media app that is used by 170 million Americans. The ruling is expected to be appealed to the Supreme Court. You got TikTok on your phone? Be careful. From Reuters out of London, Goldman Sachs said it has quite a sector coalition aimed at aligning bank lending and investment activities with global efforts to fight climate change, becoming the most high-profile member to leave the group. I said leave the group. The U.S. investment bank's decision comes against a backdrop of pressure from some Republican politicians who have suggested that membership of the Net Zero Banking Alliance could breach antitrust rules. Goldman Sachs gave no explicit reason for its departure, but focused on its strategy for the future and a growing push by regulators to make sustainability efforts mandatory. Interesting. I gotta believe there's more than meets the eye there. And last, Federal Reserve Governor Michelle Bowman said today that inflation risks to the economy remain real and labor market data hard to interpret, and that augurs caution with further decisions on central bank rate cuts. She said, "I continue to see greater risk to the price stability side of our mandate, especially when the labor market continues to be near full employment. With that in mind, I would prefer that we proceed cautiously and gradually in lowering the policy rates as inflation remains elevated." Well, you got one article there saying it's all good for another rate cut, but you got a Federal Reserve governor saying, maybe not so fast. I guess we'll see at the meeting next week. Or week, is it next week? Next week or week after next? Yeah, FOMC. Let's see. Maybe it's next. I guess it's next week. Anyway, it is when it is. Logic 247. That is our 24/7 around-the-clock E-mini alert services. It's not just E-minis. It's crude, gold, silver, bonds. Now, the way it works is I send out alerts, and a logic alert has an entry price, an initial target, often additional targets, and a final trade to target. These alerts can come out anytime around the clock, 2 a.m. or 2 p.m., because futures trade around the clock and we have traders around the globe. So our day session is their night session and vice versa. Now, over the last 331 weeks, we've issued over 18,500 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based on market structure and a very simple process that we teach all of our passport holders in their one-on-one mentoring sessions. Now this week, since the markets opened Sunday night at 6 p.m. Eastern, this past Sunday night, through 6:30 a.m. Eastern this morning, we'd issued a total of 59 alerts. One never triggered. We were still waiting on 10. Then I put some more out this morning. So of course Valerie will finalize the recap for the week this afternoon. So we had, at the time she did the recap this morning, a total of 48 actionable alerts, of which 6 or 13% would have been stopped out, again based on market structure and that very simple process we teach all of our passport holders. Now, yes, you can trade the logic alerts, but the real purpose of the Logic 247 alerts is to teach you how to read a chart. The alert comes out, you bring up the 30-minute chart, you draw a horizontal line at the entry price, horizontal line at the initial target, horizontal lines at the additional targets, and then the final trade to target is always the weekly trading zone above on a long or below on a short. This helps you see what I see, okay? It helps you learn how to spot where the market's most likely to run into resistance or support, and help you learn to find the windows of opportunity without my help. I don't want you to be dependent on me to send out alerts because, well, you may be 30 and by the time you're 50, I might not be around. So I can't say this loudly enough. Make sure you're taking advantage of the opportunity you have right now to learn how to read the chart. Because when the day comes, when I'm decommissioned, like DT Pro, who's going to teach you how to read a chart then? So, fine. This is low-hanging fruit, okay? So, yeah, it's okay to trade it. But don't make the mistake of not using the logic alerts as intended to teach you how to read the chart. And so far, we've had a great week. We'll see how we end up when she finalizes it this afternoon. Now, 331 weeks is a very long time, but about twice as long ago, we rolled out our original alert service, the concierge trade alerts. Now they're different. Number one, they don't come out around the clock. They're posted as a static report shortly after the Globex opened each evening. Last night I managed to get them out right at the open. Okay. If you're a member or trial member, make sure you read this information and understand it. If you don't understand it, ask and I'll be happy to explain it to you. Okay. So here's the point. Last night, the moment the markets open, all of our members and trial members had every one of these targets: S&P 500, E-mini futures, the Dow, the Russell, crude oil, NASDAQ, gold, silver, and bonds. So as we go through the charts, okay, now the 30-minute charts, that's where all the alerts are created. There's nothing magic about 30 minutes. It's just the time frame I chose to work with years ago. And as they say, if it's not broke, leave it alone. So we're going to first go to the daily chart as we do every day. But as we go to the 30-minute charts, I just want you to remember, you'll see these targets on the 30-minute chart. And remember, all members, all trial members, had these targets the moment the markets opened. We have yet another new all-time historic high today in the S&P 500, but it's getting a little weak, I think. Okay, yesterday we had there's 3 days in a row, 4 days in a row, 5 days in a row. Okay, on Wednesday we had a high of 61.02 and a quarter. Yesterday, Thursday, 61.07 and a quarter. And today so far, 61.11. That is the new all-time historic high in the S&P 500. Now, most of us don't trade off daily charts. We use smaller time frames or range charts. But there are a group of folks that do trade daily charts. In fact, they trade daily, weekly, and monthly charts. I'm talking about the institutions, the behemoths that have account balances in the hundreds of millions, billions, and in a couple cases even trillions of dollars. You see, when those institutions trade in the huge size they trade in, they're the ones who literally move price. We're basically liquidity, but that's okay. We can still make money. Now, this isn't just true of the S&P 500. Whether you trade a different futures market, individual stocks, crypto, Forex, ETF, if you'll spend 2 minutes with the daily chart before you start trading, what you're doing is you're getting a free look over the shoulder of the deep pockets that actually move price. Okay? Now they were real bullish earlier in the day, but we're well off the high of the day. Okay? That doesn't look like a lot because it's a daily chart, but it's pretty substantial. From 61.11 down to, it looks like about 60.95. Okay. The big question is, are the institutions going to carry this home over the weekend? Or as we head into the close today, are we going to see this thing, this little green body, dry up? Now, I'm not forecasting what's going to happen because I don't know what's going to happen next in the markets. Nobody does. Some people lie and say they do, but we're just honest. We don't. But we do know what the next high probability move is based upon market structure, and our humble set of indicators. This black step line, it's been trying all week to cross blue and climbing. And when that happens, price typically drops back to the BBC. You can see it here. See how the step line, the black line's on the left side of blue and climbing? But once it crosses, boom, back to the BBC. Up here, step line crosses, back to the BBC. You'll also notice the pullback holds more often than not. In this instance, it held 1, 2, 3, 4, 5 days. And even if it's pulling up from below, it holds more often than not. Eventually, it will trade through. That, of course, keeps markets fluid and tradable. Now, the BBC just stands for bull, bear, cross. When price crosses above the green line, we're bullish and expect higher prices. When price crosses below the green line, we're bearish and expect lower prices. Higher prices, lower prices, higher prices. But you see how price always reverts to the mean. And in our case, the mean is green and it's called the BBC, bull bear cross. Remember, once we get to the 30-minute charts, remember, whether you're on a daily chart, a weekly chart, a monthly chart, a 30-minute chart, a 5-minute chart, a tick chart, a range chart, the pullback holds more often than not. Now, the larger the time frame you're using, the more likely the pullback is to hold. Okay. So let's jump to the ES. The vertical line here separates today, Friday. Back here's Thursday. Back here's Wednesday. You get the idea. Now, when price rallies up to a weekly trading zone, we expect resistance until proven otherwise. When price drops to a weekly zone, we expect support until proven otherwise. Okay? But you see how price always comes back to the BBC. Pullback held, the pullback held. And then yesterday was a weird day where we were basically flat most of the session. But last night, here's the open. Okay? Now, the moment this candle opened last night, all members had these two targets. Okay? Now, we know that when price drops to a weekly zone, we expect support till proven otherwise. Okay? So this candle, we're below the BBC and we have red and falling. So we're only thinking about going short. This candle opened at 60.85 half. And from, we'll just call it 85, it dropped 3 points to the zone at 82. The zone is 60.81/82, where it found support. Support will always send the market looking for resistance. Remember, the pullback holds more often than not. Resistance sent it back to support at the zone. That support sent us this was the 8:30 candle when news came out. We ran down and tagged the short target to the tick, and then we ran up and tagged the long target to the tick. Then we had a retracement, and then we put in that higher high. Remember, we have a new all-time historic high today at 61.11. But when the step line crossed blue and climbing, boom, back goes price to the BBC. Now the question is, okay, is it going to hold this time or not? Well, let me point out, right here you have a bullish cross. That's when the blue line gets above the green line. When you have a bullish cross that leads to an extended move, the first time price revisits that area, as it did with this wick right here, it will almost always be good support. So if this pullback doesn't hold, make sure you let price get well below that bullish cross and trade something like 60.86 down to 60.82. That would be your goal for the day for 2 days. 2 points is goal for the day, so 4 points, 2 days. Now, it looks like the pullback wants to hold, but because the step line is directly above price, it represents potential resistance. If price can get through the step line, then at blue and climbing, that's potential resistance. Okay? And if price can get through that, then potential resistance, potential resistance, potential resistance. So ultimately, you will have a trade in one direction or the other. You just got to exercise a little patience. So we hit the short target, we hit the long target. Let's see what happened on the Dow. On the Dow, we opened below the BBC. Now we came down, and red and falling acted as support because it was becoming blue and climbing. So that sent us up to the BBC. The pullback held, gave us a leg, a retracement, and a leg. Then we overcame the BBC and we hit the zone overhead at 44,920/25. When price encounters a weekly zone, only one of three things happens. 70% of the time it's going to do this: consolidate. 20% of the time you'll get rejection, like that. 10% of the time you'll get what's called the slice. That's when price slices through a 30-minute candle, slices through the weekly trading zone like it's not even there. When that happens, price will typically retrace back to the zone it sliced through and continue in the direction of the slice. Pretty simple stuff. Now, these weekly zones were published Monday morning at 6:15 a.m. Eastern. We've published the zones the 14th of this month will make 15 years since we first published the zones. They come out every morning, every Monday morning at 6:15 a.m. Eastern. And once they're published, they're carved in stone for the entire week. They do not change in any way whatsoever. And so when price drops to a zone or rallies up to a zone, what do we expect? Resistance, till proven otherwise. When it drops to a zone, we expect support, till proven otherwise. Okay? What's price trying to do right now? It looks like it wants to go up and test the BBC. But it could just consolidate sideways. And if it does, red and falling and the BBC are going to come down to meet it. Now remember, when I gave you the numbers from around the world, the Dow was the only one in the red. The other four were in the green. Not by a lot, but green nonetheless. On the Russell. See, yesterday at the zone, we tried to get through it and tried to get through it and tried to get through it. And then we got this wide-ranging consolidation. And then we got a leg and a retracement, a leg and a retracement, and a leg. We didn't make it all the way to the short target. However, based on where we opened last night at 2402.40, we'll just call it 2402, we dropped to to 23.97. So it's 5 points. You only need 2 points to get your goal for the day. Then buyers came in and drove us up. Okay, this was off that 8:30 news this morning. I got a glitch in this chart. You see it? Let's fix it. We just go to 2 minutes and then go back to 30 minutes. Something happened there. Glad I spotted it. So we did actually come down, and we came, it looks like, within a tick or so of touching that short target. What was the low? 96.4. Yeah, so we missed it by 4 ticks. But red and falling turned to blue and climbing, and that got us above the BBC. Leg, retracement, pullback held, and that sent us all the way up to the long target at 24.22. We even spiked it a little bit. Resistance will always send the market looking for support, which it found at the BBC. Gave us a nice leg up, but notice we have a high, a lower high, and a lower high. In fact, that high is a little bit higher than that high. So that keeps sending us back to the BBC, which sent us up the blue and climbing, which is now resistance because it's directly above price, on its way to becoming red and falling. Now this will be interesting. We've overcome the step line, and buyers are running for red and falling. Now one of two things will happen. We'll either get through it or we won't. If we don't get through it and price comes back down, you want to make sure you let price get below this low right here. Something like 24.03 down to 24.01. That would be your goal for the day. Okay. Short target, long target. All members, trial members, had these targets last night, 6 p.m. Eastern. NQ. Let's scrunch this up a little bit. Okay. So here's where we opened last night on the NQ. And we pulled right up to the BBC. Red and falling turned to blue and climbing. Now this candle on the NQ, it opened at 21,450 and it dropped. Basically, it dropped 25 points at $20 a point. That's $500 per contract traded. And your drawdown was very minimal. Okay? So, on basically every market we've looked at so far, you could have got your goal for the day on that first candle last night. Now this support right here, okay, sends price up to the BBC. The pullback holds until it doesn't. See how red and falling turns to blue and climbing? We make a run at the zone. Back. Price rarely travels in a straight line. But right here, we're getting the bullish cross, and we scream right through that target. Now, look what happened. When the move ran out of steam, price came back basically to the top of that long target and it acted as support and gave us another leg. Okay. So NQ is at the high of the week by far. And this right here is the highest weekly trading zone for the NQ. Now, by close of business today, we expect price to be at or below the highest weekly zone. At the moment, it doesn't look like that's how it's going to play out, but that's how it's played out most of the time over the last almost now 15 years. Okay. There are weeks where we close above the highest zone or below the lowest zone on one of the markets. Okay. Typically, we close inside the playing field. Crude oil. We opened below the BBC, so instinctively we're thinking lower prices. This candle opens at 68.38 and it drops $280 per contract traded to the target, and then it even fell a little further. Now, this support right here, you see these lows? You see these lows? That's market structure. You should be expecting support there. Support sends us to resistance, pullback hell, and that sent us all the way down to this zone where we consolidated for hours, and then we dropped down to this zone, 66.90/95, and the low was 98. So we missed it by 3 ticks. Support is now sending us looking for resistance. Now, when price moves up to the BBC, we expect resistance, and when price moves up to a zone, we expect resistance. So what this is right here, this is resistance times 2. 2 reasons for the market to find resistance here. But if it does overcome it, keep in mind that as price approaches this short target from below, there's a good chance that will become resistance. Okay. Gold. Here's where we opened and we dropped right to the short target and all the way to the zone. This candle opened at 26.51 and it dropped to 26.35. It's about $1,600 per contract traded in that one candle. Consolidation at the zone, support. Now, see, we traded through the BBC here and ran right up to the long target. Resistance sends the market back to support at the zone and the BBC, which sends us back to resistance at the long target. And then we get below the BBC and we go down to the short target pretty much to the tape. That support sends us back up to resistance at the zone, where we consolidate as we do 70% of the time. Now, if you're not a member, if you haven't taken the trial, how beneficial would it be for you at the beginning of the week to have these lines carved in stone, knowing where to expect support, knowing where to expect resistance? It might make your job a little simpler. And when you're consolidating like this, you just leave it alone. Okay? You got to wait for it to get a move on like this. Okay? All right, last silver. Now, back on Wednesday, I said I was going to do a Michael, and I drew fibs from the low to the high. Okay? And yesterday we had a 50% fib retracement. Last night we caught a 62% retracement. This was now I'm going to go ahead and get rid of those because otherwise they'll just be confusing come next week. So here was the open last night. Now with silver, you only need 2 pennies to get your goal for the day. We're above the BBC, so we expect higher prices. From 31.83 up to 31.86, that's 3 pennies. That's $150 per contract traded in that one candle. And then the market rolled over. Came all the way down to the short target. Once you got below the BBC here, 31.69 down to 31.57, $600 per contract traded, but it kept going all the way down to the zone, 31.37/38. What was the low? 39. Missed it by a penny. That support sent us all the way back up to resistance at the target. That resistance sent us all the way back down to support at the target. That bounced us up to resistance at the zone and the BBC. That's resistance times 2. And that sent us all the way back down to the zone, support, which bounced us all the way back up to the zone, resistance. You could have these zones on your charts as early as next Monday morning. How does that happen? Send an email to support@cfrn.net. In the subject line, put, "I want to become a member." In the body of the email, put your name, your phone number. We're not going to call you, but we're going to send you an email full of information and a link. Once you read the information, if you decide you want to become a passport holder, click the link, take care of business. Then Valerie will send you a couple of extra emails with a lot of information. Don't let it overwhelm you, okay? Just put those emails in a folder so when the time comes that you need that information, you'll know where it is, okay? As a passport holder, you're going to get 2 hours of live training every trading day in our live training room. It's an interactive environment. Real trades in real time with real money. And answers to your questions as we're trading. Along with 2 hours of group training every trading day, you get private one-on-one mentoring, no extra charge. The strategy you learn, the indicators you own as a passport holder, are fluid across all markets, all time frames. Futures, stocks, crypto, Forex, ETFs, it doesn't matter. Price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. You'll also get the Logic 247 alerts around the clock. You'll get the concierge trade alerts every evening, the second they're published. You'll get the weekly trading zones every Monday morning at 6:15 a.m. Eastern. And you'll be able to attend the members only workshop every Thursday night at 8 p.m. Eastern. You also get the golden key that unlocks all the private Telegram channels. Just like the workshop we had last night, it will be placed in that private channel in Telegram, along with hundreds of others. Do you need to watch them all? No. Are there a gazillion teachable moments in there? Yes. So if you choose, you can go through. Just like here on our YouTube channel, youtube.com/CFRN. There's over 2,600 daily episodes archived for your educational and viewing pleasure. Now, there's two different ways to join this afternoon broadcast each and every day. The best way, just go to mytradingiq.com. Scroll down to where it says Noon Broadcast. Click the link, fill out the 30-second registration form, and you're done. What will happen going forward is every trading day, you'll get an email about an hour before the broadcast starts. So at 12 noon Eastern, all you have to do is click the link in the email, and it'll automatically log you into our platform. The benefit there is you'll have access to the question box, so you can ask questions and participate in the discussion. Of course, there'll be days that you're out of the office, away from your desktop, but you still want to join live. And there'll be days when you're busy, can't join live, but definitely want to get caught up later. I point you to our YouTube channel, youtube.com/CFRN. It's the Christian Financial Radio Network, but all you got to remember is CFRN, because you already got the YouTube part memorized. Okay? All right, let's wrap this week up with our good word for the day. Yesterday, we started a topic, Dealing with Loneliness, Part 1. Now, I don't know about you, but there are times when I'm in a room full of people and I still feel lonely. In 2 Timothy 4:16 we read, "Everyone abandoned me." So what's the proper way to deal with loneliness? 1, learn to be alone without feeling lonely. Jesus often left the crowd to be alone with his Father in prayer. Why? Because he knew that solitude is essential to spiritual growth. And he came back from those times personally enriched and better equipped to deal with the challenges of life. The Bible says in Genesis 32:24, "Then Jacob was left alone, and a man wrestled with him until the breaking of day." Out of that time, alone with God, came a man with a new name, a new nature, a new walk, and a new future. Plus, when people realize that you can enjoy your favorite dish or movie or other activity alone, they are attracted by your strength, independence, and confidence. Number 2, reject the idea that you cannot live without a certain person in your life. God is the only person you must have, and he has promised to always stay with you, to never forsake you. Hebrews 13:5. Many times we fall into depression after the death of a loved one because we haven't cultivated an outside life. But it's never too late to get started, and God will help you. Paul wrote in 2 Timothy 4:16, "The first time I was brought before the judge, no one came with me. Everyone abandoned me. May it not be counted against them. But the Lord stood with me and gave me strength, so that I might preach the good news in its entirety for all the Gentiles to hear." God will help you grieve your loss, leave your loss, and go on to what he has for you next. And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.